Hi, this is Global Flows, and I'm Patrick Brady, and I am going to uh, start over. Hi, I'm Patrick Brady, and welcome to Global Flows. Today is October 20th, 2023, and here are your headlines for Global Flows in the world today. All right, we're going to start with this article in Financial Times. Chinese investor sales, stock of U.S. stocks and bonds hit four-year low. Sales surge coincides with people's Bank of China efforts to defend renminbi. All right, another move of defense. China is selling a lot of U.S. stocks and bonds, and the reason primarily is to um, coincide with Beijing's efforts to step up its defense of the renminbi and dollar exchange, coming under pressure from slowly economic growth and capital flows. So, a way to shore up the value of the renminbi is to sell U.S. dollar denominated stocks, about 15 billion, and it's the highest monthly total since 2019. So this is a way that China is trying to shore up their own financial strength. I think we can probably see this more in the coming future, along with China lending in renminbi and trying to reduce the influence of the U.S. dollar as the reserve currency. Okay, next. Countries are seeking economic security in a turbulent world. The EU and others are pondering how to deal with value chain disruption and geopolitical rivalry. So, this article is protectionist flows, and key points are countries are seeking economic security in a turbulent world. Economic security is a broad concept that would encompass everything from controls on sensitive technology to building a broad industrial base. And the opinion of Alan Beatty is the EU's best strategy for economic security is to provide growth in the single market rather than relying on coercive action. So, this is a pro-growth stance, and this is instead of being completely protectionistic, this author is encouraging to strengthen economic security by growth in the single market. Defining economic security, let alone creating policy and the means of implementing it, has gone a long way to go. One guiding principle is clear: high productivity, growth, and the application of technology are the first places to look when making economies more resilient. You can't just regulate its way to security. Its companies must first be able to compete. It's a call to excellence. And third, how has the U.S. economy managed to power ahead of Europe? Okay, this is competitive flows and key points of the article. Economists predict transatlantic gap will continue to widen in the coming years. I've heard it said that Germany is basically in recession. The U.S. economy is growing faster than European economy due to a number of factors, including stronger pandemic stimulus. Okay, less exposure to the war in Ukraine. Even though the U.S. has much more investment in it, we have less exposure. A booming tech sector in the U.S., easier access to finance, even though interest rates are super high. And from what I understand, banks are restricting lending and keeping things very safe on the lending front. A more flexible business environment, more favorable demographic outlook. Yeah, this is a major thing in Europe. Obviously, is the birth rate amongst Europeans is very low and continuing to be lower. And America, gosh, say what you will about um, the flooding of immigrants into the country. At least one positive is that the population will continue to increase that way. A high U.S. deficit poses a threat to its growth. Of course, our government spends like there's no tomorrow. So let's look at some graphs. The U.S. economy has grown more than many European countries, more than the UK and Eurozone. This is over about 10-year or 20-year period. European gas prices rose more than the U.S. That's huge, unless you're in California, which I think is $6.50 a barrel. I hear, and here in Texas, we're under $3 a barrel. Sorry, per gallon, not per barrel. And U.S. tech sector has no comparison in Europe. Okay, actually, they look pretty close here on this graph, but the U.S. tech sector continues to be strong, although there's another article in Wall Street Journal, I believe, that states that Silicon Valley needs to rethink their business models and be more austere, looking for profitability instead of growth. Investment has grown faster in the U.S. Okay. That's it. Okay. I'm Patrick Brady. Hope you have a wonderful day. I'm signing off. We'll see you tomorrow.